Hello everyone, happy holidays and welcome to my channel. So as you might already be able to tell, we're going to be talking about Bitcoin. Specifically, we're going to be talking about that crucial six-figure level. So we're going to be talking about how we got there, why we passed it, and why we came back below. Along with that, we're going to be talking about a critical resistance level you need to be aware of. We're going to be talking about some institutional money that's stepping in and buying massive amounts of Bitcoin at all-time highs. On top of that, we're going to be talking about some major regulatory changes that might be happening within the crypto industry. And then we're going to be discussing possible investment by the US government into Bitcoin. We're going to talk about it all. We're going to talk about how this is going to affect your finances, your money, and your crypto, and if now is a good or bad time to buy crypto, if you should be bullish and if you should be bearish. So we're going to cover it all, so stay tuned. First, I want to begin by discussing how did we get all the way up to $100,000? Well, for one, it's a bull market cycle. We're already in a natural market cycle. Bitcoin is a sort of bi-yearly seasonal kind of deal going on. So we're in a bull market, bull slash market cycle. Another major reason is about a month ago, Donald Trump was reelected as the 47th president of the United States. It doesn't really matter whether a Democratic or a Republican president is elected. It actually matters just their views on crypto or the industry. You see, the stock market does tend to favor Republican candidates who are all about tax cuts on major American corporations. But on top of that, most importantly, Donald Trump claims that he's going to make the United States the crypto capital of the world. So obviously this would have major implications. He even suggested adding it to the Federal Reserve balance sheet. Now, Jerome Powell, head of the Federal Reserve, JP himself, Papa Powell, claimed that he wouldn't do that. Now, before all of this, Trump said that, or threatened, he made a threat that he would fire Jerome Powell, the chairman of the Federal Reserve. Now, we also have another reason why Trump matters is because the SEC has this gentleman who's their chairman, Gary Gensler. He does not like crypto. So Trump threatened to fire him. So then he stepped down, and now they're going to hire a new guy who is pro-crypto. So this is why Trump matters. So not only because Trump claims he's going to make the United States the crypto capital of the world, which, if you look at a country like El Salvador, who has already been implementing Bitcoin into their society and their currency, they're seeing massive returns on their Bitcoin holding. So, you have the whole deal with adding it to the Federal Reserve balance sheet, but then you also have the regulatory side. This would obviously, possibly have major changes on regulation in the crypto industry. So, that could be good. Obviously, that would mean more growth. That would mean more lenience on crypto companies and crypto exchanges. It'd leave more room for innovation. But this would also leave more room for FTX and Lunaterras. If you guys know what I'm talking about, go research 2021 and 2022. Crypto crashes like that and devastating financial issues happen within the crypto industry, and it's very real. Because one thing I also want to discuss, we'll talk about it more later, but Bitcoin is, unlike a stock, it's not backed by anything tangible. There is no revenue being generated. There's not so much implication compared to the US dollar. I mean, 90% of everything is basically traded in the US dollar, something like that, a crazy amount. So, yeah, we'll discuss more about that later. But another reason is we had those ETFs. They've been coming out for the past couple years. Obviously, this gives Granny a chance to invest in Bitcoin through a traditional Roth IRA or a 401k, which means that you can now get access and exposure to crypto and like Bitcoin and Ethereum through ETFs on the New York Stock Exchange. This what actually creates what I like to call kind of this is Bitcoin. It kind of creates what I call a price floor. So we've had ETFs coming out. So you have retail investors who don't touch exchanges, and even institutions stepping in and gathering exposure to Bitcoin. Another thing I want to talk about is why $99,000? Why is $99,000 such a critical level? And the simple answer is human psychology. You see, everyone, every profit taker, every institution, investor, bag holder, speculator, the trader, swing trader, gambler, whatever you want to call them, they're gonna want to take profit right before or right after this critical six-figure level. Part of it's going to be just natural human psychology. Six figures is a lot of money. It's just it kind of screams sell, right? On top of that, some of it's going to be bragging rights, and a lot of people like myself previously planned to take profits here at this level, at that six-figure level. Hey, super quick. So it's the next day, and I was editing the video, and I realized I left some crucial pieces of information out. So I wanted to go in real quick and add this, so I'll be doing this throughout the video. First of all, I wanted to mention that this isn't the first time that we've seen a major psychological level in Bitcoin. It's happened time and time again, mainly because Bitcoin is not valued by, like I mentioned earlier, unlike a stock, like there is no intrinsic value. It's valued based strictly off what people think it's worth. So more people believe in it when it goes up, less people believe in it when it goes down. So we've seen the psychological barrier at $1,000. We saw it at $10,000. We saw it at $20,000. We saw it at $60,000 to $69,000, and now we're seeing it again at $100,000. This doesn't mean that we could go further, because we already boofed up to $108,000. $108,000 when we later came back down after some Federal Reserve data that it wasn't even necessarily bad. It was just interpreted. It didn't digest well, and also a lot of people are skeptical on whether Jerome Powell's being truthful about some of his dovishness. But that's not what this video is about. Anyways, but if we do surpass this six-figure level for good, it would obviously have major upside opportunity. The only issue is, as you can clearly see from Bitcoin's price action, there is going to be a lot of volatility on the way before anything happens. Now, a question I've been asking myself is, will we ever see 30K or 40K of Bitcoin ever again? I don't know. So we talked about this major resistance level that clearly we rejected off from that 99K to 108K level. We've been capitulating around that 99,000, 95,000, right now 94,000 level, 93,000, 93 to $99,000, which is totally normal for Bitcoin. So now let's move on to that institutional money that's been stepping in. So you have institutions and smart money like BlackRock and MicroStrategy, ticker symbol BLK, and MSTR, who BlackRock is Larry Fink, and then MicroStrategy is Michael Saylor, stepping in and buying massive amounts of Bitcoin at all-time highs. BlackRock, BLK, who I think the CEO or at least the fund manager is Larry Fink, is the largest fund manager in the world. They have $11.5 trillion in assets under management, basically meaning they own like a large percentage of the world. And they bought $2 billion of Bitcoin in November, creating what I like to call a price floor. I mean, somewhere around that 70 to 80K level, correct me if I'm wrong, MicroStrategy bought $5.4 billion of Bitcoin near the tippity top, making them holding 2% of the global supply of BTC, which is absolutely insane. Now, somebody like Michael Saylor has been an advocate for Bitcoin for years, and it's only got him rich. That doesn't mean that now is an attractive time to buy Bitcoin. Doesn't mean that it isn't. This is not financial or tailored advice for you. I'm not a financial advisor. And Bitcoin is an extremely high risk asset, potentially the highest risk asset there is, and you can't even really consider an investment. It's more of speculation at this point. There is major possibilities that it could be the future of currency, but as of now, Bitcoin is strictly speculation. It doesn't have a whole lot of compatibility into modern day life, blah, 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 blah. Anyways, this creates what I like to call a price floor, obviously. So would if the United States started buying up Bitcoin, and then you have retail investors buying up Bitcoin through the ETFs. Then you have potentially in the future, we're going to do dots because it's potentially in the future. You have the Federal Reserve buying Bitcoin. But what's actually happening on top of that is you have institutional money buying massive amounts of Bitcoin, along with retail investors, crypto investors on exchanges like myself. It really begs the question, will Bitcoin ever hit $40,000 again? We'll see. It might never hit $15,000 again. You know, a couple last year, 2 years ago, whenever that happened, that could have been the last time we see that again. So, what does this mean for Bitcoin? Should you buy or sell Bitcoin? Let's talk about it. Now, before we start talking about bullish or bearishness on Bitcoin, I do want to mention that this can create all this institutional money. Can create a rug pull scenario. You see, if institutions decide to take profit, if God forbid something happens with MicroStrategy, or retail investors decide to sell, leading to institutional money selling, that would create a very, very like horrible, scary situation with Bitcoin. And yeah, we could just go right back down to 15K. It's obviously possible with something like Bitcoin. Like I mentioned earlier, it is not backed by any sort of company or revenue being generated. There's nothing. It's just technology. It's just an idea of technology. The blockchain itself. It's not an idea. It is technology. But the idea of how that will implicate into the day-to-day life of humans in the future. Now, I want to talk about the 10% rule. Now, if you read a book like The Intelligent Investor, or which is written by Benjamin Graham, or you study value investment philosophy, which is preached to by Benjamin Graham, Charlie Munger, Warren Buffett, some of the greatest investors in the world, they'll tell you you do not want to risk no more than 10% of your capital that you're willing to invest into speculative assets. So meaning like gambling. So we're going to call a company that you haven't actually done the research on due diligence on, that is producing revenue, that you have looked at, its past, 10K and 8K statements. We don't have to dive into it all. Anyways, if you haven't, done your due diligence, it's not a real investment. So Bitcoin right now is just speculation. It's not a real investment. Obviously, but if you ask me, it's too risky not to own Bitcoin. It's risky to own it. It's too risky not to own it. So allocate 10%, no more than 10% of your capital to Bitcoin. If you ask me, I'm not a financial advisor. Who knows? I also would like to dive into the importance of profit taking. So obviously, if you're, up, 100%, 2, 3, 600% on some sort of cryptocurrency, you should consider taking profit. Now let's dive into the reality of a market cycle. So I'll pull up a chart possibly, but this is basically the reality of a market cycle. This is how a market cycle works. So here, you have people saying, "Oh, that was bad," because they just got out of a bear market. And going up, you have, okay, let's go up here, tippity top, sigma, euphoria. Right here, people be like, healthy dip. People be like, buy dip right here. Correction. All right, here's like panic. And then, in between all these is capitulation. right? But it's an ongoing cycle. Anyways, I'll probably pull it up just to give you a better representation of the psychology of a bull market, because that was not accurate at all. But I just wanted to go over that. So basically, it's too risky to own Bitcoin. It's way too risky not to own a little bit. So I wanted to just hop on here and let you guys know how I've been approaching Bitcoin since 2022. And how, even though I'm not a financial advisor, the only way I would possibly not even recommend, maybe we'll just say agree with anyone purchasing Bitcoin. So in 2022, before we went all the way down to $15,000, I was bearish. And then when we started going into 2023 or whatever, and we came up to the $20,000 to $30,000 area, I started dollar cost averaging, which is essentially when you buy the same amount of a asset each and every month on the same day consistently, whether or not it goes up or down, to minimize potential losses and maximize gains. And essentially how it works is if you buy a stock at, if we buy, here's another chart. This is Bitcoin, but this is our dollar cost average chart. If you buy a stock at $10 and then it goes down to 8 the next month, and then the next month it goes down to 9, and then the next month it goes to 10. You're up $3 despite all the volatility. At the end of the day, now you're up $3 on the asset. Yes. Anyways, I'll make a video on dollar cost averaging in the future. But a very valuable channel, a very good man, smart and educated, tax expert, Clear Value Tax, posted a great video on dollar cost averaging, so go check that out and check out all his other content. I love you, bro. What else? Anyways, so if right now currently, so I took profit at like 80K. More like 85K. Now, if we continue to go up, you might see me, if we see major moves up, you might see me dollar cost averaging, putting the same amount of money each month into Bitcoin and other assets like Solana and Ethereum, maybe even the tiniest amount of XRP. I have a love and hate relationship with XRP. And obviously Bitcoin. I've seen massive returns on Solana this bull run. Yeah, and then if we go down, especially if we get down into the 60s, 50s, and 40s, you would see me dollar cost averaging. Currently, I own like some GBTC, one MicroStrategy, and a little bit of Bitcoin. But I have taken profit, and if we go up or down, if there's major moves, and I see it being a good time, meaning the macroeconomic situation isn't horrible, you might see me dollar cost averaging. If you ask me, this is not financial advice. I'm not a financial advisor. This is not tailored or specific financial advice for you. You should always consult with a licensed financial advisor before buying or selling any security or asset. Thank you all for watching, and be safe out there. Peace. Oh, wait, real quick. I wanted to give a quick shout out to my little sister for buying me this microphone for Christmas. And then on top of that, she gave me her old ring light she used for her makeup tutorials. I love you all, Janae. Thank you so much. Merry Christmas to you all. Happy holidays. Be safe. And dude, let's get this W. Let's stay locked in. I'm sorry for being behind on a whole bunch of content. I've got hit with some clients that I wasn't necessarily ready for. I haven't even really finished like fully building my agency and my business model and understanding how everything works. But content's going to be coming out. I'm going to be posting a video on my first month starting my agency, probably a whole bunch of catch-up shorts, along with obviously some finance content on crypto, stock market, and then obviously sharing my journey with all this. And the possible gym content, personal development content coming soon. And that's it. Peace.
What if I told you that in just 1 week, I managed to take some of the most crucial steps in launching my online business? I've done this by creating